What's going on, everybody? It's your boy, the Financial Conspirator, back with another video. Today we're going to be talking about the long-term bull case with Bitcoin and MSTR, why volatility and early adoption present you with a great opportunity. So for the first 2,000 years, gold and silver were the main global reserve assets. And then in 1971, Nixon took the United States off the gold standard. Gold was no longer tradable, or your dollars, $20 was no longer tradable for 1 ounce of gold. They took all the gold, repriced it to 35, devaluing American citizens, and they transferred to a debt system. And we believe we are in the early adoption today. And we know we're in early adoption today and transferring from U.S. Treasuries, the debt system, to the Bitcoin standard. Bitcoin is scarce. We will never find more Bitcoin in the ground. We won't be digging up more mines of Bitcoin and finding 2 trillion, increasing the supply. We can send Bitcoin across the ocean in 10 minutes with the Lightning Network instantaneously. Try doing that with $100,000 or $1 million or $1 billion or even $500 of gold. See how many hoops you have to jump through. The Bitcoin and global M2 supply correlation. I've been seeing this all over the place. I would have been a fool not to include it. But I am not the most well-versed. I can see previously in 2023, right before December, the global M2 started to run up. And Bitcoin stayed flat. Then we saw a run up. I see the same thing happening over in that July area. A run up in the M2. Bitcoin stagnate, but flying and outperforming. So, it's something to keep your eye on. This is what I love to see. Strategy's fundamentals have only been getting stronger as the price has dropped. So I'm getting more Bitcoin per share for cheaper. Strategy has purchased 157,789 Bitcoin since the top, November 21st, 2024, leveraging their debt and equity to accumulate more Bitcoin. Now this slide, I'm just going to let the volatility virtuoso explain.
So think of MicroStrategy as we take in crude capital. There's no doubt it's the best performing asset in 15 years. It's theoretically the best form of capital is digital capital. It's just scary to a lot of people. It's too volatile. It's too difficult to manage. So they want someone that can, domesticate it, step it down, package it in safe components, and then connect it into the fixed income market, the high yield market, the convert market, and the public equity markets. And MicroStrategy, we just inadvertently backed into that, because to do what we did, you have to start with a very small company, a $1 billion company, and then we become a $40 billion company, and now we're 150% Bitcoin. So if you take another $1 billion company and do what we're doing, you can't catch us, because at this point we can grow $5-10 billion a year in capital or faster. You can't catch us if you start with the same thing. But if you take a big company like Google or Meta or Microsoft or Apple, and they took $50 billion, and they bought $50 billion of Bitcoin, well, that would be good for Bitcoin, and that would be good for their shareholders. And if Apple did it a lot, they might add $1 trillion to their market cap. But it would be $1 trillion on top of $3 trillion. So at the end of the day, Apple would be an enterprise, 25% Bitcoin, 75% Apple. MicroStrategy is an enterprise, 150% Bitcoin. So how do you create a company which is 150% Bitcoin that can sell billions of dollars of fixed income instruments or billions of equity into the market with a permanent capital base that's going to oscillate, it's going to vibrate with the frequency of Bitcoin, right? That is, I'd love to say we had the idea 4 years ago and that's what we're trying to do. No, we just kind of stumbled onto just a really great business.
I do want to get to Apple.
So think of MicroStrategy as
Okay, and a few of these things you're going to hear the same thing over and over again. That's on purpose. I'm trying to ingrain these fundamental things into your head because I know you're seeing down, 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 down. So I might not be talking as much, but I'll let you read while you listen because I know it's a lot of talking. So me talking on top of the talking is a lot of talking.
You don't want it to be non-volatile. Here's what you want. You want it to be extremely volatile because that way you know something nobody else knows. I give you 21 years and you can go start a company, borrow money, raise capital, start a hedge fund, create a Bitcoin business, tell your friends, start a podcast, build a life for yourself, get leverage, mortgage your house, change the view of your bank. I'm giving you the ability to do work. It's a lever. It's a 21-year lever, okay? Like MicroStrategy's been working 4 years. If Bitcoin had gone from 10,000 to 65,000 on August 11th, on the day we announced our Bitcoin buy on August 10th, we wouldn't be worth 40 billion right now. We would be worth 4 billion right now. And the volatility is good because if it was straight line growing and everybody saw that it was very predictable, then a bunch of people richer than you that you don't like would just buy it all and you wouldn't be able to get any.
I like that. So the volatility is actual turning lemons into lemonade. It's like, I always say, you don't want to find something that's easy because then everybody will do it. So it's not easy to buy Bitcoin when it's dropping, but that's actually your best protection from some genius sitting on 40 billion just buying it all up.
The volatility is a gift to the faithful. The volatility, for example, I started buying Bitcoin and it soared up to 66,000. It crashed down to 40,000. It zoomed up to 60,000 something again. It crashed down to 16,000. It came back up, and all the way it was very volatile and uncertain. And we were able to go from $250 million in Bitcoin to buying 25 billion to having 42 billion in Bitcoin. And we took our company from 600 million in enterprise value to more than 100 billion.
Yeah.
If Bitcoin had been predictable, if Bitcoin had just grown 30% or 60% consistently, 5% a month or something, then Warren Buffett, Charlie Munger, Jamie Dimon, everybody in the world, Bill Gates, they all would have bought it. I wouldn't get any. I would have 1/25th as much. We wouldn't be a $100 billion company. We might be a $5 billion company. But the volatility was a gift to the faithful. It scares away the tourist. It scares away the lazy. It scares away the people that are already conventionally rich, that have all the money. If you're a 20-something or a 30-something and you're willing to do the work, if you're willing to spend 100 hours or 200 hours, if you have more time than money, then the volatility of Bitcoin is a gift to you. If you have more money than time and you're arrogant and egotistical and you just pick the obvious, then if the volatility goes away, you buy Bitcoin. If people in the rest of the world knew what I know and they understood and they agreed with me, Bitcoin would go to $10 million tomorrow. And if Bitcoin went to $10 million tomorrow, I want you to think about how you would feel and how your viewers would feel, because you would lose 20 years of stacking opportunity during which you get to buy at less than $10 million. So the difference between $10 million and 100,000, that's what you give up if the volatility goes away and people start to agree with you. So I'll end with just one thought, which is, in my life, I've made a bunch of very successful investments. I bought Facebook, I bought Apple, I bought Google, I bought Amazon, I bought Bitcoin. And there's a simple formula if you want to make 10x your money or even 100x your money. And this is the formula. Find something in the world everybody needs, nobody can stop, and few people understand. And if you find that, if it's like obvious, Amazon, Google, Facebook, iPhones, Bitcoin, digital capital, digital money, digital photos, digital relationships, digital video, if it's obvious and nobody can stop it, but you go and you talk to a bunch of people with more money than you, and they're older than you, and they're more successful than you, and they all say, I don't get it. I don't get it. Okay, at that point, the cowardly response, the loser response is, well, a lot of people told me to give up on it because they don't get it, so I won't get it. And the right response is, I'm going to study it and decide if they're wrong, and I'm going to make a decision for myself. And if I got it, if I bought Amazon when Wall Street hated it, if I bought Facebook and Google and Apple when Wall Street hated it, if I bought Bitcoin when Wall Street hated it, then I'm getting rich.
Charlie Munger did say.
And the volatility is...
Right? You don't change Bitcoin. Bitcoin changes you. And everyone gets Bitcoin at the price they deserve.
This is a 30-year chart of returns on the S&P index. And this chart tells you that if you missed one day, there's one day every year when 85%, 90% of all of the gains come. One day. And there are 36 hours a year when all investment return takes place. So in 365 days, nothing happens 99.5% of the time. This is why we have the laser eyes. This is why we say HODL. Because, and I have said before, trading Bitcoin is a sign of lesser intellect.
Yep. I was a victim of this myself. I fell victim to the charts. I'm going to wait for MSTR to drop to 87. That's when I'll buy. Watched it go to 220. Thank goodness I didn't sit on the sidelines, because then it blasted to 500. And now it's back at 250. You better bet your bottom dollar I'm throwing everything I got in there. Fool me one time, shame on you. Fool me twice, shame on me. Now, before we get into this next clip, it does get a little bit scientific. So before, if you don't have any grasp on the second law of thermodynamics, also known as entropy, the basic principle is high pressure will always move into lower pressure, right? So high pressure being a can of soda, you open that can of soda, and the gas inside of that can of soda explodes upwards into the lower pressure that is the surrounding air, right? So, using that principle, we understand that fiat, the higher pressure system with the endless money printer, will always flow into the lower energy system, which is Bitcoin. A fixed supply, 21 million, and decentralized. Untouched by the regulators, untouched by the money printers, untouched by the sanctioners, the warmongers.
But this whole conversion, financial engineering type strategy is often referred to online as the infinite money glitch. but I wonder if it is infinite or not. And if it's not, do you perhaps see it running into more of a supply issue first or a demand issue first? Demand being perhaps there might not be potential buyers of all of those other options like bonds, or supply that if you create too many shares and can make too many conversions from your stock, that existing investors will be diluted too much that you'd then run into a sort of cap with that. Or can this just keep going forever, Michael?
See, the misnomer there is it's not a money glitch. It is a digital transformation of the capital markets. When you have a system that moves from a higher energy state, a more disordered state, to a lower energy state, lots of energy gets given off. Think of steam becoming water. Like, is it a money glitch? It's just steam becoming water and it condenses. What happens when water becomes ice?
It's not a glitch. It's just how things work. And that's all I got for you, folks. Still in the early phases. We got M2. We got a few weeks to see if that's bogus. And if we start marching up slowly but surely, then we've got some good things coming in sight. So focus on strategy increasing their fundamental value as the technical price falls. It's a discount. Come on, it's a discount. Volatility is a gift to the faithful. Stay faithful, my friends. I'll see you tomorrow. Hopefully.